kind of get to this Bitcoin Zen position where it's obvious what's happening. It's obvious that fiat can get printed forever. Make sure that you're focusing on what's your big stack. You don't need to hit a home run on some random leverage play. The biggest asymmetrical bet in my mind still is Bitcoin. The strategy should be everyone else is buying Bitcoin, which is the only finite thing. The CEOs can dilute the shareholders, but Satoshi's not coming back to dilute Bitcoin. And so that's the difference in my mind. Believe me, it's going to be so much better than playing these fiat games, because the fiat games are not fulfilling. I think a smart man or a wise man would do what Seyr's doing, which Seyr isn't buying all the stocks and putting it in his treasury. He's buying the Bitcoin.
Before we get started, give the people a little bit of an overview of who you are and why you're excited about Bitcoin currently.
I have been excited about Bitcoin currently for a long time now. So my name's Sean Harris. I got into Bitcoin. I started buying back in 2019. I'm class of 2019. So I'm not an OG, at least not in my mind. And, I'm excited about Bitcoin because it is the true opt-out. It's the solution to fiat. And, that was something that was boggling my mind for a long time. How to save money correctly, how to be able to get money, how to have lasting wealth for the rest of my life. And Bitcoin is the solution. So it's been fun for me to start stacking. I've lost Bitcoin along the way by doing stupid things, and that's okay because it's still early, and I still get to stack and trade in dirty fiat for Bitcoin.
Yeah, we all have done stupid things. By the way, because for me, 2019 is almost OG level. It's been 6 years, so you're almost completed. Like you're in your second cycle. That's pretty advanced stuff, I guess. What year do you have to be in Bitcoin to classify for you as an OG?
That's a great question. I honestly don't know. I feel like, to me, it feels like class of 2015 is OGs, but then, I'm sure the class of 2015's it's like if they bought in 2013, those guys feel like the OGs, but those guys, it's 2011, so it's probably all relative at this point. I don't even know what classifies someone as an OG. Just as long as you're stacking and you get what's going on right now. If you're paying attention, you should be paying attention to Bitcoin right now.
Yeah, it's like someone that comes in Bitcoin in 2040 will look at the people that come in now in 2025 as OGs and they have been in Bitcoin since 15 years. What?
Yeah. Yeah, it does feel cool to say that I've been buying Bitcoin since before Michael Seyr. I guess that feels cool. He has a lot more Bitcoin than me, just by a little bit. But it does feel cool to be able to think, oh yeah, there's people that have come after me that are pretty big in this Bitcoin space.
And the biggest one is still to come. Like there's so many huge people out there that haven't figured out Bitcoin yet. So many big companies, so many big money distributors that how do you haven't started a small position at least? It's mind blowing for me.
I don't understand how people don't see it yet. Just talking to your friends, talking to people. Once you've been in it for long enough, you kind of get to this Bitcoin Zen position where it's obvious what's happening. It's obvious that fiat can get printed forever, and we have digital scarcity, and it's absolutely scarce in Bitcoin. And so it only makes sense, at least in my mind. And maybe people look at me and I got these orange glasses on and they think I'm crazy, but it makes sense when you just think about it logically. The thing that can't get printed, that's where all the value will accrue to.
Yeah, it's a funny thing because we say you probably you're so deep into Bitcoin, you have orange glasses on, so you only see the Bitcoin, and there's more and more Bitcoiners who actually have an orange glass on. I love that.
Yeah, yep. It helps out. Block out all the distractions.
focus solely on Bitcoin a second. I really want to get to the bull market and how you think about things, but just because I think it's also like an educational obligation that we kind of have to talk about the stupid things that we did so other people can avoid them. Mm-hmm. And you talked about that you lost Bitcoin along the way with stupid things. What kind of things did you do?
So, you know what's interesting, right? So I started in 2019. And the meme that's been around forever is not your keys, not your coins. And such a simple phrase, such a simple meme. And, but it's so true, right? And if you don't have your keys to your Bitcoin, you don't have your coins. And I think what the biggest thing that people don't realize, and what I didn't realize when I started studying money, is that the money that you have in your bank account, or the perceived money that you have in your bank account, is not actually yours. It's an IOU from your bank saying that when you need this money, when you swipe your card, we will permission you to use the money, and we will give you access to your money. And and so the thing that you always think about is, okay, if I have to have my money permissioned by somebody else or by another institution, is it really my money in the first place? Is it really my money if I don't control it? If I don't have the full control over it, is it mine? And the answer is no. It's not yours. There's so many cases throughout history, recent history, of countries or sovereign nations that go through debt crisis or sovereign debt crisis, whether it be, Cyprus in 2013. You can Google all this, right? If you're watching right now, you can pause it, you can Google it. What happened in Cyprus in 2013 with the bail-ins that they did, you have Lebanon, right? They went through a debt crisis or a currency crisis in 2019, which just kept going on. People were literally going to the banks, robbing the banks back for their own money. I don't know if you call that robbing the banks because they're going to get their own money. I don't know what you call it, but they're showing up to the banks with guns or fake guns to get their own money back to pay for medical bills. And, if you look at what's happening in Argentina, the same thing. So there's been just so many, as Satoshi would put it, breaches of trust from central banks where the central bank or banks in general, they're supposed to have this kind of unwritten contract with people, which is, we won't lose your money and you will give you your money when you need it and when you ask for it upon request. And what's been going on is that as these sovereign countries who all have fiat currencies, they all have seigniorage, which is the right to print their own money. And as they have the right to print their own money, they control the means of production, right? The communist way to put it. And so the way that I lost my money, my Bitcoin, wasn't because I had my keys, right? The way that you lose your Bitcoin is when you let someone else hold your keys for you. And because that's the game changer, right? If you can get your Bitcoin, hold your keys, have your own private seed phrase, your backup seed phrase, or multi-sig, right? If you want to get more advanced, you can start using multi-sig, which as your stack grows, that's a really good option to do. And that way you're protected from banks doing risky things with your money. So the way that I lost my money or my Bitcoin, or some of my Bitcoin, was back in 2020 or 2020. Yeah, about 2020, there was a company called BlockFi, right? That came around. I'm sure you've heard of BlockFi. I used to listen to a guy named Anthony Pompliano, who used to pump BlockFi, right? Jason Williams, all these guys, whatever. Like that was their sponsorships. The plebs, the Bitcoiners, the maxis would be like, not your keys, not your coins. But there were some interesting things that they were doing, right? And the thing that they would say is, back in those days, right? So you got to remember, I started getting into Bitcoin in 2019, but I really started studying it in 2017. So it took me about 2 years to actually buy Bitcoin before I actually bought it, because back then you didn't have a million podcasts that were, Bitcoin maxi podcasts. You didn't have these books. Like Saifedean came out with the Bitcoin standard in 2018. So in 2017, you didn't even have, it was like, it was this thing for nerds. And I have a basketball background. Like I played basketball overseas, and so I didn't have like a technical background at all. So I wasn't very smart with computers. And so for me, it was very foreign. What really kind of attracted me was obviously like the NGU number go up. And then also as slowly as I started to understand more about Austrian economics, as I started to understand about macroeconomics, and, going down bonds and all that stuff, fixed income, it made a lot more sense about what Bitcoin was. So in those days, I'm getting long-winded, but in those days, what was going on is BlockFi had the greatest messaging, right? The greatest messaging, which was, Mt. Gox was back in 2013, 2014, whenever Mt. Gox failed. And then there was the Quadrigas, right? Quadriga was another Bitcoin exchange that failed in Canada. And so these things these things have happened along the way where people will take your Bitcoin, they'll custody your Bitcoin, and then they'll run risky games with your Bitcoin, and then they'll lose your Bitcoin. And so their whole saying was, this is totally different now. Like these are institutions that are holding your Bitcoin. They have risk management. They have people that have their whole careers and backgrounds in finance, and it was very attractive, what they were saying. Store your Bitcoin here. You'll get some yield off your Bitcoin, put your Bitcoin in here and get and finance it out. You'll get fiat back. You can pay your fiat down. Like you can pay your loan off, refinance it as your Bitcoin goes back up. All these different things that they were saying. And it was very interesting. And so I put some Bitcoin in there. I was trying to run like the Bitcoin play of, okay, if I put my Bitcoin in here and the Bitcoin price goes up to here, then I can pay off the loan. And then, you're just running all these different games. And so then BlockFi failed, right? Then they failed because what were they doing? They were relying on FTX, which FTX failed, which FTX was probably relying on Luna, which Luna failed before FTX failed, and Celsius. So you had all of these cascading things happening where, that's something that we'll probably end up seeing in the fiat system. And that was one of the reasons why I got away from fiat, was because that's what I was foreseeing, is all these banks would cascade and fall and fail. And then I'm putting my Bitcoin up for risk in the same exact environment, running fiat games with my Bitcoin, which makes no sense whatsoever. So I guess the long way to put it is, I got duped, right? I got duped into believing that giving up my keys, giving up the custody of my Bitcoin to someone else or to an institution would have been smarter than me just holding my own money. And again, it's the old saying, not your keys, not your coins. And so today we're seeing a lot of similar things, right? There's going to be more companies that tell you, put your Bitcoin here and we're going to give you a yield, right? We're going to give you a yield on your Bitcoin. But the question is, where does the yield come from? Because there's only 21 million Bitcoins. So if everyone's getting a yield on their Bitcoin, how does that work? Like how can everyone get a yield on something that's absolutely scarce? Bitcoin is savings. It doesn't produce a dividend. It doesn't produce a yield. And you have to produce your own dividends in life. And that's kind of what the lesson that I learned through all of it was, I need to just be a little bit more humble, which, this isn't normally the talk that you hear when you're listening about Bitcoin. It's like people going online talking about how you have to be riskier, or you got to degen in, or this is life-changing wealth, which it is life-changing wealth. But my message has just been, and the lesson that I learned was, I have to increase my earning potential. I have to increase my skills in the world. And I have to provide a skill or a talent or some type of business that will produce more income for me, so then I can stack my Bitcoin. And that's what I've done. Over the last few years, I'm earning more money now than I ever have, more fiat money, and that helps me stack more Bitcoin. And that's my message is just, don't play the risky games with your Bitcoin. It's not worth it because the bull market promises are very pretty. They're very sweet. They're very attractive. And the bear market pain it is something that is very hard to get through. It took me about 2 years to kind of just get to that Bitcoin Zen portion of it's like that Bitcoin's gone. It's not coming back. And I'm okay with it, right? Because I learned a lesson. If I didn't learn a lesson, maybe I would be a little upset still. But I'm happy with where I am and that I get to keep stacking, even with Bitcoin at 106,000 or whatever it is right now. It's still so low.
So you're just 100% in Bitcoin and don't have any Bitcoin related products or anything other than that?
So I'm not going to lie. Maybe I do. Maybe I'm not. Maybe I haven't been the smartest. I do have a couple different, I do get stocks from the company that I work at. And so I have that. And then I do have a little bit in a couple of the other stocks. But in all honesty, it's a very tiny percentage, like very, very tiny. And my main goal is stacking Bitcoin. So I don't stack anything. I have a couple of things that I have. But I put up a big percentage of my stack before. And I think that's something that I learned about is, it's not worth it. Like, make sure that you're focusing on what's your big stack. You don't need to hit a home run on some random leverage play. The biggest asymmetrical bet in my mind still is Bitcoin itself, because it is the safest bet, and it's going to keep moving very fast. And there's always going to be these micro strategies or these, the 21 Capital or the whatever, Dylan LeClaire is running in Japan. I think like that just was like had a ton of NGU this morning. So there's always going to be different stocks that pump or different altcoins even that pump. But I have no altcoins, just Bitcoin only. And that is where I'm stacking, right? That is my focus, is just stacking Bitcoin. And no trading, none of that stuff.
Do you think that those stocks like 21 Capital, MSTR, MSTY, and all those, I call it Bitcoin related financial products, are kind of a distraction in a similar sense as in previous bull markets, altcoins and FTX and Celsius were distractions?
I don't think that they're on the same level. I think that they do a good job of promoting Bitcoin, actually, which is great because people are starting to see, okay, what's going on right here, right? And some of these companies might blow up, right? Like, I think that there's some of these companies that are going to end up it's not going to work out for them. I think that Seyr is a very smart individual, probably smarter than everybody else. And I don't think that MicroStrategy is going to blow up, because I think he's been able to figure out how to, his whole thing is he is betting that he will always be able to borrow money from the fiat system. And so I think people think that he is going to have to sell Bitcoin to pay off his loans. I don't think that's the case. I think what he's going to do is he's going to keep borrowing more money to pay off the loans and then buy Bitcoin with the excess, right? Because he'll start having some of his loans should be coming due pretty soon, right? I'm not sure when that is, but he started doing some of these plays back in 2020 or 2021, and so some of his loans should be coming due, or maybe they're 10-year loans. I'm not exactly sure what they are, but I think that he is figured out a way where he's doing what the Fed is doing. Essentially, it's like, look, the Fed prints more money to pay off their debts, and then they print more money to pay off those debts. So every central bank is doing. And I think that's what Seyr has figured out, that he can kind of be, as a publicly traded stock, he can run a lot of different plays where he can essentially print more of his stock to pay off or borrow money and borrow it very cheap, sometimes at 0%, and then pay off his old loans and refinance everything and then just keep it going as Bitcoin's price continues to rise. So I think he's kind of figured that out. But maybe he hasn't. I don't think they're distractions. I do think they are distractions for quote unquote retail, like regular people like you and me, because we don't need to buy all these different Bitcoin exposure plays. We can just buy Bitcoin, right? And like those, to me, those stocks are for people who, or institutions who have mandates that can't buy Bitcoin. And so if all of your stack is in MicroStrategy, or all of your stack is in 21 Capital, MicroStrategy, IBIT, ETFs, and you don't own any Bitcoin, you don't hold your keys, you're doing something wrong, right? Like you're doing something extremely wrong, because you're missing the point, which is MicroStrategy isn't doing stock buybacks, right? They're selling their stock to buy Bitcoin. They're borrowing money not to buy more MicroStrategy stock. They're borrowing money to buy more Bitcoin. 21 Capital is borrowing money to buy more Bitcoin. All of these companies are doing, what are they doing? They're buying Bitcoin. And so have the same strategy, right? The strategy should be everyone else is buying Bitcoin, which is the only finite thing. The CEOs can dilute the shareholders, but Satoshi's not coming back to dilute Bitcoin. And so that's the difference in my mind, is there's one thing that is absolutely scarce, and there's a million other things that they're not scarce.
Yeah, and Satoshi, even if he comes back, cannot even dilute the shareholders, the Bitcoin holders in that race. I think that's the biggest thing, because I hear sometimes this argument from no coiners, like, what if Satoshi comes back? And I'm like, yeah, what if? Like, what does happen? Like, nothing. He has no control over the network. Yeah. He might have some Bitcoin, but the same thing is true for me. I have some Bitcoin. Mm-hmm. Just because of more Bitcoin than maybe someone else, I don't have more control over the network than someone else. We all have the same voice. We are full node operators. If you don't have a full node, then you have less voice in Bitcoin. But if you have a full node voice, a full node, and have a full voice, like you are the same as Michael Saylor. Maybe more, because maybe Michael Saylor doesn't run a node. I don't know. So. And the same for Satoshi. Like, he does not control the network. He just started it. He just discovered it, however you want to look at it.
Well, it's like, who created the game of chess, right? What if that guy came back and said, hey, we're going to change the rules of chess? People were like, sorry, buddy. We're already playing chess. We've been playing it for years. These are the rules to the game of chess. And we're not changing it just because the guy who created it comes back and wants to change the rules. We're already playing. We already know what the rules are, right? There's 21 million. Every 2016 blocks, there's a difficulty adjustment. Every 210,000 blocks, there's a halving. That is the monetary policy of Bitcoin. And, and that is what it is. And so if Satoshi came back and wanted to change it, it doesn't even matter, because there's too many people that already know what the rules are. The rules are transparent. And this is the game that we have, and it's the best money that's ever been created. It's not perfect. I don't know if you can create perfect money, but it is the closest thing to perfect, and it is the solution to fiat. It's the solution to gold. It's the solution to being able to store your wealth in something that lasts forever.
100%. I couldn't agree more. I have an interesting one. We all might have some big expenses at some point. So I don't know, like your car broke down and you really rely on it, and you have to have a car, like you have to buy a new car, or like buy an old car, or you are moving and you have to buy new furniture, or like whatever, like the life is happening. you might have to spend in a particular month more than you actually make in that month. Mm-hmm. And as Bitcoiners, especially those who are almost all in or kind of all in, like myself, and as I hear, almost also like you, there's two options we basically have. We can sell some of the Bitcoin to buy the thing, or like get over that, or we can borrow against that. How do you look at that trade-off of like selling some Bitcoin to get the thing, or borrowing against your Bitcoin? but giving away the custody of maybe 5% or 10% or 15% of your stack, and maybe losing more Bitcoin in the end than actually you would have lost if you just sold some. How do you look at that trade-off when it comes to I have to buy something in my life?
So, that's a really great question, because that's what a lot of people wonder, right? I've been stacking for 4 years. I got a lot of Bitcoin saved up. I hate selling my Bitcoin. So what am I going to do, right? Am I going to sell the Bitcoin, or am I going to go borrow against it? I think you just have to be honest with yourself with what you're doing, right? Borrowing against it is very risky. And the reason why borrowing against it is risky is because, any loan that you do is over collateralized. An over collateralized loan, that means that, and this is how it's been, right, with Bitcoin, because Bitcoin's price moves up and down, it's so volatile, they always make you over collateralize your loan. So say you wanted, $20,000 of Bitcoin. You're remodeling your home, right? You need $20,000 of Bitcoin. Well, you have to put $40,000 of Bitcoin into this exchange, right? Someone else custodies it. Someone else has the keys to $40,000 of your Bitcoin. During that time, now what's interesting is you're probably taking out a loan and you're paying 9 or 10 or 11 or 12% for this loan, right? And you're paying because you have a payment that you have to make every single month on this loan, because you have to pay it back, right? Like, you eventually have to pay back the loan that you're taking out. When you pay it back, then you can either refinance it again, or you can, take control of your Bitcoin. So first of all, what can happen as you put your money into Bitcoin? You put your Bitcoin in Bitcoin. Are we in a bull market right now? Or are we in a bear market? Right? Do we know? Like, if it was in November of 2021, did we know that the bear market was about to start and that Bitcoin was going from 69,000 all the way down to 15,000? So what happens is, as the price goes down, so say now the price of Bitcoin that you have that's over collateralized goes from $40,000, and the price of Bitcoin gets cut in half. Now it goes to 20. Well, now you have to put up more Bitcoin, so you're back up at $40,000 of Bitcoin, right? That's collateralized. You have to post more collateral. And if you don't have any more Bitcoin during that time, say you only have $40,000 of Bitcoin, that's your whole stack. Okay, well, you don't have any more Bitcoin to post as collateral as Bitcoin goes down. So as the price of Bitcoin goes down, you risk what's called a margin call. And if you get margin called, what they essentially say is, all this Bitcoin that you've posted as collateral is now ours, right? That money is ours. You keep your fiat, and now it's ours. So what you've done is you've traded $40,000 of Bitcoin for $20,000 of fiat. Good luck, and then you're doing this whole remodel. You're like, I'm going to pay it off and blah, blah, blah. And you end up losing it all. Another thing that can happen during that time. So again, you have to post twice as much as what you have. You have to pay a loan that's like 12% that you're paying on what you've received. You risk a margin call. Another thing is, someone else holds your keys, so you don't know what they're doing with your Bitcoin. One thing that was interesting with BlockFi, right? You put your Bitcoin in a BlockFi and you post it as collateral for a loan if you want to borrow against it. You put it in there. Then as soon as you want to verify where your Bitcoin is, you can't. Like, you want to verify in your node. Okay, I'm going to go on my node. I'm going to go verify where my Bitcoin is. It's as soon as you send it in and post it, they've taken it and sent it somewhere else. And now it's almost like a coin join, and you have no idea where that Bitcoin went. One thing that someone like Strike is saying is, you're going to have transparency. When you post your Bitcoin as collateral, we're going to give you transparency, and it's going to be in this, where you can verify on your node that your Bitcoin is where it should be, right? That doesn't mean that you own the keys to it, though. At any point in time, they can take your Bitcoin and move it to wherever they want to. And and then that becomes a scary situation. So someone owns your keys. You can't really verify where your Bitcoin is. Normally, I guess you can now if you do it with Strike. You have a 12% loan that you're paying, and you're always in a worry if Bitcoin drops 50% or if the bull market is over. What's happened in every bear market is the price of Bitcoin gets cut by like 70, 80%. So those are the things that you have to worry about. If you time it really well, then you've done a great job, right? If you time it at the bottom of the bull market or the bottom of the bear market, you can ride that up. You don't have to worry about a margin call. You can like chip away some of your Bitcoin and pay off that loan because your Bitcoin's just gone up like 10x, but why not just stack the Bitcoin during that time? That's the bet that you're making if you just buy the Bitcoin. Me personally, ever since I was a part of BlockFi and I lost my Bitcoin, which I did post as collateral, and then I posted more Bitcoin as collateral because the price was dropping, and then BlockFi just ended up going bust, right? So, in the middle, after I've already posted Bitcoin, it's the worst case scenario, right? You posted twice as much Bitcoin to get the fiat, and then the price of Bitcoin drops. You go, okay, I'm going to dig into my stack. I have to post more because I don't want to lose this Bitcoin that I have. Then it drops. Then you have to post more Bitcoin again, right? Like as it drops, you have to continually add more Bitcoin and collateralize that. As you do that, then one day you wake up and you go, this company is going to die. And now I could either pay off this loan, which I have to sell more Bitcoin to pay off the loan to get my Bitcoin back. But I'm worried that in the moment that I pay off because it takes like a week. So it takes a week for me to pay off the loan for them to give me my Bitcoin back. What happens if during that week I pay off my loan and the company goes bust? And when I had that idea, the company went bust that week. So I was like, well, I'm glad at least I didn't pay off that loan, and then I would have lost even more Bitcoin. So those are the risks that you run, which it like during a bull market, it feels like the bull market promises are pretty and they're sweet and they feel like Bitcoin's never going to be volatile ever again, that it's only going to go up. But then the bear market, you get awakened to a reality of there's risky things that can happen along the way. Again, I'm never going to tell people what to do with their money. I believe in that people should be allowed to do what they want to do with their money. If they feel like, hey, there's a product out there where I can collateralize my Bitcoin and get fiat and I can borrow it, and this time is different and Bitcoin's only going up, like the institutions are buying, countries are buying, we're in a super cycle. It's an eternal September. Everyone's going to keep working and keep buying Bitcoin. That's great. I just don't think we're there yet, because when I go around and I talk to people, they still have no clue what Bitcoin is. Like people that I've still yet to meet someone. I've been studying Bitcoin since 2017. So for 8 years, I've been studying it. For 6 years, I've been a buyer of Bitcoin, and I've still yet to meet someone just randomly, right? Not when I go to Bitcoin meetup. Yeah. Okay. If I go to the Bitcoin conference, yeah, I'll meet true Bitcoiners. But when I'm just out and about doing my daily business, doing my, buying groceries or at work or talking to friends or talking to friends of friends or talking to family or friends of family, I've never met a Bitcoin maxi ever. Like in this whole 8 years, I've never met someone who's been like, here's what you got to do. Buy Bitcoin, avoid everything else, hold your keys. And so I still don't know if we're there yet, to the point of this is a super cycle. I still feel like there's probably going to be another, at least one more cycle that we're going to go through before we kind of hit this hyperinflation and you hit Bitcoin, really soaring. But maybe there's going to be a lot more than one cycle left. Maybe it's just cycles forever. So I'm always an advocate for me personally, I got burned doing the whole collateralizing thing and borrowing against my Bitcoin. I just don't think that the products are very, I don't think that they're very enticing right now. Maybe as Bitcoin becomes more, as it becomes less volatile, when it hits like $15 million or $30 million, then we're talking about maybe it becomes less volatile. You're not worried about the huge drawdowns. And then there's going to be banks that will do it with you, right? And you'll get like a 2% loan instead of a 12% loan. And I think then maybe that becomes more attractive. But right now, I don't think there's any products out there that really do a good enough job for you to borrow against your Bitcoin. And so for me personally, it's just so much easier to just say, hey, if I'm in a bind, I need, my car broke down or whatever, let me just chip away and sell the Bitcoin that I need. And so I can spend it on what I need. Bitcoin to me is savings. And so when that's what you save things up for. You have savings if you have an emergency, you have a family emergency, or you have an idea, a business that you want to start, right? And so those are the things that I look at. If you have a business that you want to start, you have some savings, I have to put some of my savings into this business because I want to make it work. That's how I look at it. So there's a lot of different reasons why you might have to sell your Bitcoin. Again, make it something that's an emergency or something that you would sell your savings for in the first place. It's not, I don't look at it so much as like, this is a thing that I need yield on. But everyone's entitled to do whatever they want to do. But for me personally, I would never do that. I would never borrow against my Bitcoin until I could really look at the conditions that I'm putting myself in and evaluate that and understand that, okay, these are good conditions now, which again, that would be Bitcoin needs to be a lot more stable. It needs to be way less volatile, which I love the volatility of Bitcoin because it's volatile to the upside. I want my Bitcoin. I'm young. I'm going to be around for another, 60 years. So I want Bitcoin to be volatile for a long time because that's good. Because when it's volatile to the upside. It's also volatile to the downside, but overall to the upside. And the loans need to be better, better priced. And so if the loans are so high, it's just, to me, it doesn't make sense right now.
Let's take a break for a moment and appreciate the beauty that Coin Vigilante has made with the Bitcoin watches. Those watches are the most amazing, the most elegant way of showing that you are a true Bitcoiner. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. And now if you have Bitcoin, I really do hope that you don't have it on exchange. But if you do have it on exchange, I have two ways for you to deal with that. The first way is you put it on a hardware wallet. That's the entry for you to get into the self-custody game. I recommend BitBox, Bitcoin only edition for that. It's a super simple and secure way. And if you check out the link in the description, you even get 5% off if you use the code Robin. And the second way is the Bitcoin Way. The Bitcoin Way is your all-in partner in terms of how to get the most out of your sovereignty. They will personalize for you a self-custody setup that is perfect for your individual situation. They will show you how you can secure your own devices. Securing your Bitcoin is not enough. You also have to keep all your devices secure. One topic that is overlooked often is the inheritance plan. What happens with your Bitcoin once you are no longer here? Do you have a plan for that in place already? And last but not least, if if you're in jurisdictions where you don't feel safe, it's better to get a plan B. For all that, head over to thebitcoinway.com/Robin to get a 30-minute free call. And just a quick side note, I will be for the first time ever speaking at the Bitcoin Prague event in June. It will be absolutely legendary, and I'm really looking forward to seeing all of you there. You can get your ticket in the link down in the description of Bitcoin Prague, and very important, use code Robin to get 10% off your ticket. I'm really looking forward seeing you there. I love those points. I mean, you're 100% correct. With interest rates are just way too high on those products. Like paying a 12% interest just doesn't make sense for me. Especially like if you compare it to other assets, collateral that we can use, like a house, you get a way better loan on that. And why is that? Like, just because we are early to that whole game, because a house, real estate, is such a worse collateral than Bitcoin. Bitcoin you can liquidate right now in that very second. A house can take months till it's sold and stuff like that. And so it's for me, it's unimaginable why the rates are so high. I think we're just early to that whole market. We are early to Bitcoin, and we're even earlier to borrowing against the Bitcoin. But I like the point that you brought up, that like that's what I got from it. If you transfer your Bitcoin away to someone else that gives you fiat, it's like selling Bitcoin, because you don't know what they're doing with it. You almost sold your Bitcoin. And then it's the question, do you want to sell $20,000 or $40,000 of Bitcoin? Because if you need 20,000, you can transfer 20,000, or you transfer 40,000 and borrow against it and pay interest rates on it and have that risk. And especially I like that point, and that's why I personally I'm at the point where I had to decide, do I want to borrow against it or sell it, because I earn more Bitcoin than I like most of my income is already in Bitcoin, so I have to sell some to cover fiat expenses. And I came to the conclusion, I want calmness in my life. I want to focus 100% on the things that I do to upscale my earning potential, and I want to just have everything in Bitcoin. That's all. Like, I don't have anything else. Like, literally anything. Like, I have a microphone and a computer and stuff like that, but like no asset at all.
Yeah, one other thing and I think the selling points that they give you too, right, which is a good selling point, is you don't have to pay taxes when you post your Bitcoin as collateral and get fiat back, which is true. Right, because it's not a tax occurring event, because you're posting your Bitcoin, you're not selling it. But when you sell your Bitcoin, then you also have to pay taxes on top of that, right? So, maybe one day we get to a point where it makes sense, and that would be great if they can get a product that's better. I'd love that, but I think right now they have to have. They have to have these loans that are so high, because, like what you said, most institutions don't understand what's going on with Bitcoin, and it's not just like and I don't know how Strike does it, right? Because I haven't done it with them. But with BlockFi, it wasn't like BlockFi gave you the fiat. It's like they partner with an institution, and like that's how it's kind of worked through. This institution gives you that fiat, and they give you the fiat like right away. It's kind of nuts. And you feel, it's this false feeling that I'm so rich now, and I could always post Bitcoin and I could get fiat if I needed it, and I don't have to pay a tax on it. But then the tax is, like the tax that you're paying is the 12% that you're paying. Like that's the interest rate that you're paying, or the tax would be like the fear, right, of getting liquidated. As Bitcoin goes down, the tax, like it's an unknown tax. The unknown tax is much worse than just the known tax. Okay, I'm gonna have to pay a tax on selling my Bitcoin. I know what that tax is, and you don't know what the tax is, and the multiple different types of tax, or how it is taxing against you and against your psyche when you're put in a situation where you're like, I am gonna get liquidated and I could lose all this Bitcoin.
Yeah, there's the emotional cost the hidden emotional cost and the hidden actual cost of like the interest rates and things like that, which is, and I also, one point I don't like about it, I think it makes the fiat system stronger if we use it more and more. And I know there's this whole speculative attack on the fiat system with opening up that black hole and getting more fiat to get more Bitcoin, and it's like a speculative attack on the fiat system. But I'm not sure if that's really true. I think when we use more fiat, especially also as a medium of exchange, especially also as like those loan products and financial products, in the end of the day, I think we make it stronger. Maybe I'm wrong on this. I'm not a macroeconomics, but I feel like when we use fiat versus using Bitcoin, we are making fiat stronger and not Bitcoin.
Yeah, I mean, I guess either way, you're selling your Bitcoin or you're borrowing against it. You know, maybe if you were spending the Bitcoin directly, but we're just not really there yet. There's not as many vendors out there. There's not a ton of Steak and Shakes out there, you know, that are accepting Bitcoin. Yeah, it's, I don't know if you're making it stronger or not, but I think that in the long run, it's just so much easier to just sell the Bitcoin. I mean, think about, okay, let's talk about the OGs, right? We're talking about OGs at the beginning. Think about someone who has, say they have 1,000 Bitcoin, right? Are they, you know, when they have a life emergency, are they borrowing against their Bitcoin, or are they just selling some of their Bitcoin, right? They're like, okay, I could sell a quarter of a Bitcoin and now I have 999 and 0.75 Bitcoin instead of 1,000 Bitcoin. I don't think that those type of people are borrowing against it, right? And so I guess what I'm trying to say is, it seems like borrowing against your Bitcoin is like a poor man's move, right? Like buying shit coins so you can turn that into more Bitcoin is like what a poor person would do. You know, buying all these stocks and hoping that you can get rich off of them and then turning it into Bitcoin seems like a poor man's move as well. And so it's like, okay, well, what would a wise man do? Like, what would a smart man do? I think a smart man or a wise man would do what Seyr's doing, which Seyr isn't buying all the stocks and putting it in his treasury, right? He's not doing that. He's buying the Bitcoin. He's leveraging other people's money, right, to buy Bitcoin, but he's buying the Bitcoin. And I think that's what I look at it is, okay, what would a smart person do? What would a sound mind do? And I think a sound mind would say, I think I would just sell a little bit of Bitcoin and I would figure out a way to earn more money. I would figure out a way how to increase my skills. I mean, we live in a time where you can make money online. If you have an internet connection, if you have access to a computer, you can make money, and a lot of money, online, doing a lot of different things. And with access to AI that we have and different, you know, so many different things and so many different ways to create a business, and the knowledge that's out there, to me, that just makes the most sense to me is, why not just increase your skill set and make more money than you've ever made before in your life, and then turn that into the Bitcoin. You know, it might take you a year or 2 years or 3 years to get there. And people think, and I think part of it is like, Bitcoin's going to run up and I'm never going to have a chance. Like, people think that they deserve, I have to have one Bitcoin and I don't have one Bitcoin right now. So I got to play all these risky games to get one Bitcoin. And then during that process, then they actually lose more Bitcoin than what they would have if they would have just focused, instead of focusing on how do I flip my Bitcoin and flip these altcoins and flip everything else to get more. If they would have just focused on stacking and figuring out how to get more money in their job, or how to create a business which provides more money, or writing a book, or being able to sell something online, or creating some type of content, right? Like, whatever it is that they need to do, get better at what you're doing, or find something that you can get really good at and offer that to the free market, and then let the free market decide if you have any value. And if you do, then great. And if you don't, then keep working at it. And as you continue to work at it, then the free market will reward you if you give the free market what it needs. And as you do that, then you can stack way more Bitcoin. And believe me, it's going to be so much better than playing these fiat games, because the fiat games are not fulfilling. Even if you get rich off of flipping your Bitcoin or doing trading or whatever, it feels fake, right? It doesn't feel real. But if you can work in a job and provide value for others and make a business profitable, or operate a profitable business, or be a leader of men and women and help others grow, and you can run a company and you make money doing that, it's so much more rewarding. And that's the whole point of what money is. The money is your life's work. It's not this thing where you go on a computer screen and click a button and then all of a sudden you have way more money. No, it's work. It's true work. And it takes time to get good at providing something of value. And as you do that, then you'll get rewarded very handsomely. And then that's when you can start buying the Bitcoin that you feel like you should have been buying by just trading or flipping or borrowing against it in the first place.
I love this message. I think that's a really good message for Bitcoiners. Invest in yourself, in your family, and in Bitcoin. Those are the three things that make sense to invest in. Everything else is noise at the end of the day. And take away the most valuable thing that you have, your time, because you also have to spend time monitoring those loans and seeing what are they doing, and figuring out which one is the best provider, and seeing the risks of that. And I don't even want to do that. That does seem like a hustle, honestly, to look at all that and continuous. That is something I'm very sure of, is if you choose to borrow against a Bitcoin, you have to stay on top of it. You have to look at every month, every quarter of okay, what is the company doing? Is it like in risk? What is my loan doing? Do I have to post more collateral? What is the Bitcoin price doing? All of a sudden you have to care for those things. I don't want to care for those things. I just want to buy, I just want to earn Bitcoin and have a little bit more Satoshis each month. That's all I want to do.
And that's such a good point, right? It's very interesting. When I had that loan, I had to check the price of Bitcoin every day, multiple times a day. And, I just made a meme about me checking the price of Bitcoin, but I don't check the price of Bitcoin very often. I'll see the price. Oh, someone will post a chart. Oh, Bitcoin's at 106 or whatever it is right now. But I don't check the price of Bitcoin. And people will come up to me who know that I'm a Bitcoiner, and they'll go, "Oh, Bitcoin's doing really good today." I'm like, "Oh, it is? I haven't even looked." And so, I think it's very freeing when your life doesn't revolve around the price of Bitcoin. It doesn't revolve around the NGU. It's happening. It's going to happen. It's going to come. But when you're focused on just stacking at any price, because that, look, even if you got to get to the point where even if we didn't have Bitcoin, Bitcoin can't be the thing that's that makes it so you have money. It can't be this thing that saves you. Obviously it is the solution to these terrible fiat systems, and fiat has been so overgrown, like a fungus, throughout the whole world, which makes it very hard to be successful and makes it hard to be free. But if you say, I'm going to first be successful with or without the Bitcoin, I'm going to be able to make money with or without the Bitcoin. And then you can do that and then put your work and your wealth into Bitcoin. That is the ultimate key, in my opinion. That's how you truly become free, because you don't need the NGU. You need the Bitcoin because it's permissionless. You need the Bitcoin because no one can seize it. No one can freeze it. No one can take away your wealth. And then on top of it, Bitcoin will reward you because it is absolutely scarce and it is early and people still haven't figured out what it is. And as they figure out what it is, then more people gravitate towards it. But most people don't understand money, and institutions don't even understand money, right? They understand that there's a game being played, but they don't understand, right? They figured out how stocks work. They figured out how bonds work. They figured out how all these other financial institutions and all these other things work, but they haven't figured out how money works. If it was true, then they'd all be buying Bitcoin. And so as they start to understand the store of value that Bitcoin truly is, then more and more of these companies and institutions will start buying. But it's still so early. It's like, okay, just become successful. Figure out how to become successful. Do that first, and then put your savings and your wealth into Bitcoin, and then you become unstoppable.
I love that messaging. Really cool. I want to get also to, we talked a lot about the bull market, and I think we also discussed before and about the bull market promises that you're gonna see. And it's I don't know who tweeted. I think Nico from Simply Bitcoin tweeted it out a couple of months ago. It's the best cycle for news and the worst cycle for price. How do you look at that bull market versus the previous ones that you have seen?
So, it's kind of interesting, right? Because I was studying Bitcoin when it went up to 20K in 2017. Then it went down to like, 3,000 or 4,000. And then it was like hanging out around 10,000 when I started buying in 2019. And then it went down during COVID. In 2020, it went back down to like $4,000 or $4,500, if I remember correctly. It dropped like 50% in one day, and then it started to climb back up, and then we got all the way to, it went down to like 4,000 in 2020, and then by the end of 2021, it was like at 69,000, and so it did more than 10x, right? And in those days, like you didn't like in 2017, you had like no companies buying Bitcoin. You had no countries even interested in Bitcoin. And then in 2021, you had like Seyr started buying in August. MicroStrategy started buying in August of 2020, right? And so that was after COVID. And I think his first buys were like at 11,000, and then it dropped to 10,000, and everyone was freaking out. Oh, he's lost all this, like not Bitcoiners, but the media. Oh, he's made this huge bet and he's lost all this money. And then he bought more when it dropped from like 11 to 10 or 11 to 9,000. And that's what Saylor's been doing this whole time, right? He just keeps buying. And then, and then you also had in 2021, you had El Salvador said, okay, we're going to start buying. They started buying in September of 2021. And, they basically started buying at the top, which is fine, because then they bought all the way down and now they've been buying all the way back up, and they were hated on for a few years. But I agree, like those times you only had like El Salvador and MicroStrategy in the last bull markets, and Bitcoin's doing crazy numbers, right? From the bottom to the top, way more than a 10x. And so if you think, okay, from the bottom of this cycle, which was like 15K, well, 10x would be 150K. And you're not seeing the crazy growth when you're seeing like, okay, MicroStrategy is like on steroids of how they used to be buying Bitcoin. You have 21 Capital coming out. You have Bhutan, some random country in Asia, right, saying they're mining Bitcoin. El Salvador is just bragging about how much Bitcoin they're buying. You have, Dylan LeClaire is running this company that they're buying Bitcoin in Japan, while Japan is like going through a debt, like a sovereign currency crisis. And so you have all of these crazy things that are going on where, there's way more companies buying Bitcoin. And every day you look up, there's a new company buying it. And so I think Nico's spot on. It's been the most interesting, plus the ETFs, right? Like, don't forget about the ETFs that are going on. So it makes you wonder if these people are actually buying Bitcoin, right? Like, that is the true question. Are they buying Bitcoin, or are they buying IOUs to their Bitcoin? Are they custodying it? Are they verifying on chain that they're actually buying Bitcoin? Or are these just a bunch of IOUs, like how they did paper gold? Is this papered over Bitcoin? Because you would think that the price would be pumping a lot harder. Maybe as the price is pumping, there's a lot of OGs that are selling, right? You're going to have OGs that sell. That's just natural, right? If you're worth nothing, right? you've been like a janitor, but you knew what Bitcoin was, and now you have your net worth is like $75 million or $100 million. You're not going to go out and buy some ranch or a property. You're not going to sell some of your Bitcoin. And that's the thing is like when I started getting into it, it was all about, oh, Bitcoin is in a few hands. It's not decentralized because it's so centralized. And it's like, well, you don't understand what those even mean. And so I think there are OGs that are selling, which is great for Bitcoin because then Bitcoin will naturally move hands. And to those who maybe don't feel like they have enough Bitcoin, they're still trying to stack and grow their percentage. And for those who feel like, I kind of have my stack, those are the people that are selling, but I would say I kind of agree with Nico. It is really interesting to see how many institutions and countries now are starting to buy Bitcoin. And like, you feel like, oh, like there's like, is Saudi Arabia buying? Is there these other countries that are buying, but they're buying on the down low and no one knows about it yet? That's probably the best strategy. United States is like, yeah, we're going to start buying, whatever that means. Like the SBR really didn't prove to be anything that I thought it could have been or that it maybe should have been. But I think that's better overall that the United States, even though I'm American, I'm glad that there's not this huge country buying Bitcoin just yet. So there could be a lot of paper buying, I guess is what I'm trying to say. Maybe there's not, but you would think that the price of Bitcoin would be going up like to 200K or 300K with all of these announcements that keep happening.
Yeah, it's like I don't think personally that they actually do it, but the more and more they buy and the less the price moves, the more suspicious I get of exactly that. The thing that why, for example, BlackRock, like what incentive would they have they have so much money. If there's something fishy going on, like also with Coinbase, I don't think, I don't know. It's really hard. Like, why would they do it if they risk everything to get a little bit more? Because Coinbase has a great business model, BlackRock has a great business model. But yeah, it's something interesting going on. Maybe it's also just like the lack of retail interest currently, but this does not move the price. BlackRock should move the price way more. So it's an interesting thing.
Yeah, you would think that. Institutions are ran by people, right? And so it would make sense that in this kind of first institutional wave, you're going to have these institutions act the same way that retail acts, just at a bigger level, right? That countries are going to act the same way that retail acts, just at a bigger level. And so it would make sense to me that we're going to have these run-ups, but it's institutional run-up, and then that they're going to sell because they're scared or they don't know what to do or they feel like they timed it right, and they're going to get in the trade, and then they're going to take profits and get out of the trade because they don't really understand what it is that they own just yet. And so you would imagine that there would be institutions kind of doing a similar thing. I would imagine, and maybe I'm giving too much credit to Michael Saylor, but again, I guess maybe I've become a big Michael Saylor fan. So I would imagine that he is verifying on chain that Coinbase actually has his Bitcoin. I would imagine that that's going on. With other institutions, I'm just not so sure, right? Am I so sure that a BlackRock is verifying on chain that Coinbase is custodying their Bitcoin? I feel like there could be a lot of trust going on. I could be, in all of those ETFs, I feel like there could be a lot of trust between these ETFs and Coinbase or whoever, that they're actually buying the Bitcoin, they're verifying on chain. Or who's to say that, that they're telling one ETF and another ETF and they're pointing to the same address and they're saying, here's your Bitcoin, right? How do they, how, like, a proof of reserve is an interesting thing, because a proof of reserve, if the two parties don't know, and it's kind of kept private, a proof of reserve could be if Coinbase is custodying, 10 different ETFs Bitcoin, but then they point to the same addresses, here's your Bitcoin, and then they can go and verify, okay, there's Bitcoin there. Well, they don't control the keys to that Bitcoin, so how do they know that that's their Bitcoin and it's not another ETF's Bitcoin, or it's not Coinbase's holding Bitcoin? So how do they know for sure? And the answer is they don't, right? They don't know. And so that could be another way that trust is being implemented into the system. When you're using a custodian, those are the issues that you can run into. And so that's why I would just be a little weary that I don't know for sure if all the Bitcoin that they say is getting bought is actually getting bought, or if it's just getting papered over.
Yeah, we need public transparency for proof of reserve of saying, hey, those are the 5 biggest positions, and this is the address for that, and for all the rest of it, like there is another address. So like proof of reserve, I think, will have to be the standard at some point, because people will not trust anyone holding their Bitcoin at some point if they cannot even prove if they actually hold it.
Yeah, like the guy for MicroStrategy, who's not Michael Saylor, like a different guy who's kind of, I don't think he's the CEO, but I think he runs some different, I don't know what he does, but he was posting on Twitter, and people were trying to get MicroStrategy to post proof of reserves. And then he comes out and he goes, and he gives them like their 10Q or whatever, which is like their filing to the SEC government, right? To the SEC. And they go, okay. He goes, well, in here, it says that we own the Bitcoin, right? In this government document, it says that we own the Bitcoin. And like, that's not proof of reserves, buddy. Show us the addresses. That's the proof of reserve. And so, yeah, imagine if Coinbase came out for everyone that they custodied Bitcoin for, and they said, here's the proof of reserves for the addresses for MicroStrategy. Here's for the ETFs for BlackRock, for IBIT, and here's for this other ETF and this other ETF and this other ETF. Then plebs could go around, or Bitcoiners could go around and actually verify, okay, this is all correct. You know, the Bitcoin is actually in these addresses, and this is addresses for this one, this address is for that one. But if it's kind of all done behind closed doors, how does MicroStrategy know? And see, this is the big point too for Michael Saylor. Even if Coinbase comes to him and says, we are custodying your Bitcoin, and they give him proof of reserve and the address, how does he know that that's not IBIT's Bitcoin? How does he know that that's not Coinbase's Bitcoin? How does he know that's not anyone else's Bitcoin other than his? Because he doesn't have the keys. So that is a really interesting thing to think about when it comes to proof of reserves. If you're a custodian, you can't just give these private proof of reserves back to whoever you're custodying for. You actually would need to make it public so everyone could verify. And if there's another company that you're custodying for, they can go, well, no, that's our address too, you know? And so as they do that, I don't know what the downfall is. If you're going to come out and say if you're going to file in your SEC filings, this is how much Bitcoin we hold, what's the downfall to posting a proof of reserve? I don't see I don't understand what the attack vector is, because you're already showing that you have Bitcoin, a certain amount of Bitcoin. So I don't understand what the attack vector is by posting the address to where that Bitcoin is actually held. You know, that doesn't make sense to me, why they wouldn't do that.
It's very true. I think proof of reserve has to be the standard. It's something that if you don't do that, like, there will come a point where if you don't do that, people will not trust in what you are saying.
Yeah.
Trust will always be replaced by verification.
Yeah, and I think that's the issue with Coinbase, is because Coinbase has kind of been this leader for like a decade, more than a decade, in Bitcoin and crypto, right? Whatever crypto is. And they've been able to create this system where people trust them to custody their Bitcoin, or institutions trust them to custody their Bitcoin. And it's very interesting because they don't really have a Bitcoin ethos at Coinbase. They have a very big fiat ethos at Coinbase. And so maybe it'll take something like Coinbase really blowing up. Although I just don't see how that could happen, because now, like, if you're once you start custodying Bitcoin for like BlackRock, you got the Federal Reserve behind you, you know. So I don't know how they'll blow up like an FTX. But again, that was the whole thing with BlockFi. The institutions are here. You're safe, and you can't just play these fiat games forever. And I don't like how Coinbase is kind of trying to control the narrative of this is how the custody should be done, because I think they're doing it wrong. So maybe there needs to be another company that comes around and can custody better with proof of reserves. And maybe that's what the free market needs. So maybe if we're trying to make some money out there to buy more Bitcoin, maybe we need to create a company that actually custodies Bitcoin for institutions that shows proof of reserves. Maybe that's what the market might want. But
absolutely,
a lot of regulatory moats you got to get through.
There's a lot going on. The time completely flew by today. I loved the topics that we have covered today. I have one question that I ask each and every one of my guests, and the question is, what can we learn from you besides Bitcoin?
What can you learn from me besides Bitcoin? I guess we talked a little bit about just, you know, I'm a big hard work and smart work maxi as well. So the proof of work that comes from Bitcoin, it should also match your proof of work in your daily life. So make sure you're getting to work, you're making things happen in your daily life, and as you do that, you'll start to be able to stack a lot more Bitcoin than maybe you ever thought was possible.
I like that. It's like invest in yourself, as we said before, like invest in yourself and in your family and in Bitcoin. That's the three topics, the three things where most of your money should go. Really cool. Thank you so much. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question, what are you doing in your local economy to further the adoption of Bitcoin?
Okay. Right now in my local economy, you know, I'm not really going to businesses with it. I do talk to, I mean, I just kind of, everyone knows that I'm the Bitcoiner guy, right? Everyone I talk to, and, I'm not doing a ton right now. I wish I was doing more. But I've just noticed that people kind of go at their own pace. So, I have had, you know, one of my cousins just recently texted me and said, "Hey, I'm starting to buy $100 of Bitcoin every other week, you know, every paycheck." And so that was kind of cool to see. That's been like years to get him to start doing that. But, you know, just helping people out. If they need help with Bitcoin, they know I'm available. I try to just give them some ideas. You know, we did a white elephant gift at my company party over Christmas, and I gave like a cold card and like a seed plate and different things. So just trying to get people's ideas open to how they can own their own money. So I'm not doing a ton. I wish I was doing more, but just slowly spreading the word of Bitcoin little by little is what I'm doing.
I love that. Thank you so much, Sean, for being on. This was really awesome. Before I let you go, where can people find you, ask a question, and reach out to you?
Yeah, you can find me on Twitter at Big Sean Harris. And then every 4 years, we run the halving party. So I am one of the organizers for the halving party. We're the guys that did the laser eye meme from the meme factory. We're the ones who started that. And then we started the halving party back in 2024. So 2028, we will be having the next halving party. So come out to where we do it. We did last time was in El Salvador. And we're choosing the location now. So we're excited for every halving party. And it's not a typical Bitcoin conference. It's more of a celebration of the monetary policy, what makes Bitcoin special.
What better location to celebrate the Bitcoin policies, the monetary policy, than in the home of Austrian economics? I'm a big fan of Vienna. Just so if you need a location, hit me up.
I don't think there's any beaches in Vienna. That's the only thing.
Great lakes, really great lakes. They're like almost as big as an ocean. But yeah, like lakes. The Austria has everything except the ocean and good policies. But yeah,
yeah, that's true.
But yeah, thank you so much for coming on. It was a really great pleasure, and it was really cool to talk about the borrowing against Bitcoin and the philosophy of selling Bitcoin with the OG topics. Yeah. I loved it a lot. Really cool. Thank you so much for your time, and also thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back tomorrow with another episode. Bye bye.